Now to our first conversation. Nigeria's manufacturing sector, we're entering the second half, of 2026. It's faced, a familiar dilemma with while inflation has eased somewhat, exchange rate volatility has moderated, and economic growth has, become more stable. Manufacturers insist the industry's biggest problems remain unresolved. So far, from shrinking, access to credit, persistently high borrowing costs, to policy inconsistency, energy expenses, weak consumer demand, the sector continues to operate below its potential. Yet there are also signs of, cautious optimism as government capital spending, infrastructure, investment, and regional export opportunities, that's, beginning to show some sign of improvement. So as the first half of 2026, has it laid the foundation for an industrial recovery, or are manufacturers still trapped in a low growth cycle? Well, joining me for this conversation, we have Mr. George Onafowokan as the CEO of Coleman Wires and Cables and chairman of the Manufacturers Association of Nigeria, Ogun State chapter, to tell us how it's been so far. Great to have you on the show, sir. Good morning.
Good morning, laddie.
Yes, sir. And a little birdie told me what's your birthday. Happy birthday, sir.
Thank you very much, laddie.
How does it feel celebrating another birthday?
You're going to get me in trouble now on the national TV. I'm telling everybody it's my birthday. Well, anyway, it's good. Anyway, we thank God every day. And another year is something to thank God for. So for me, happy times.
Happy times.
Happy times.
And I'm sure your body feels great. Regardless.
Surely. Surely.
Fantastic. It's good to have you. And, definitely it's been quite an interesting first half.
Yes, it has.
Of 2026. And, we still have the big question, at this point. When we're coming into 2026, we all had a particular vision.
Correct.
For 2026. I believe you had a vision for your business. You had expectations.
Yes, we did.
What's the first half been like so far for you?
I think the first half has been, as you said earlier, very volatile. I think one thing is that we all came into 2026 with this lovely, fantastic optimism that, look, the economy is getting stable, things are going to go right. But nobody took the account of there's going to be a curveball. And the curveball, we all know what that is, the Q1 curveball, which is the US-Israel-Iran war. It threw the whole world into a tailspin that I think the whole world wasn't prepared for. And that literally triggered inflationary push everywhere in the world. Strait of Hormuz getting tightened up. Oil went from a $60-70 barrel to over $120 a barrel. And shipping costs went up from a 40-foot container, $3,000 or less from Asia to Africa, became over a quarter, $6,000-7,000. So for every business, cost in terms of import of raw materials, import of anything, literally went out of the roof. Inflationary push in Nigeria started going up again, though stable in terms of petroleum products starting to increase in price. In the inflationary push from transportation, from logistics, all created a push on food and movement of logistic of food in Nigeria. And so invariably to any manufacturer, it became a shock that was unexpected, but had to be dealt with. We have no choice. We all live in this world. So whatever shocks you see, you have to remodel over your strategy to actually fit in to this. So I think that was the biggest shock for us. I think Nigeria is a bit lucky in the sense that we got a little bit of policy right in terms of petroleum with the Dangote refinery. So yes, we saw pushing prices, but we didn't see queues like any other countries that were in queues for days to try and get petrol. But that allowed us a bit of ease of the shock that would have been a bit more worrisome if we had not had some level of safety. Take for the goods part of fiscal policy that's been done right, and also macro policy that's been. I think the macro policies really saved us also. reserves at an all-time high of over $50 billion, meant any instantaneous shocks from any exit in terms of short-term funds, FPIs, was not seen. So Nigeria has got it right in the last 2 years when it comes to macro policies. So our finances are stable, FAC is getting better, but it means that investments can still be put in because nobody worries. As I said, I'm MAN chairman and I sign off every new member in MAN. And if I look at it, Ogun State, which I always say is the most viable state in terms of manufacturing sector, and we're almost like the booming state. So I see more of, and I look at it every month in, month out, I'm signing new members. And for you to be a member of MAN, you must be functional, fully running. You should most likely be running a year or two before you can even apply, because there's no application in MAN that for a paper manufacturer. We have to inspect your working, you have to show us your number of workers, show us your books for you to apply to us to become a MAN certified member. And so if we've been signing over 10, 15 averagely every month or two new members in, something is good still happening. Yes, it might be the proportion. The only part I always look at it, where the proportion of new investors coming from. The sad part is that they're foreigners. But it's also a good thing. It just shows confidence in it. So if I look at it, out of almost 10 new members we're putting in, I'll sadly say almost 70% are foreigners.
70% foreigners. Wow. But looking at the capital importation data, we did see $152.3 million. That came into manufacturing Q1.
Correct.
2026. That's the latest data, so far. Up about 17.2%.
I think
year on year.
Yes, Nigeria is now the destination. I think based on, let's just be factual and take off the rigmatas of all our issues. We are one of the most stable economy in the last 1-2 years now. Yes, we got things right. We had to take a hard knocks harmonization of the FX position, which got our macro policies right, subsidy removal, which got the leakages that literally were just bleeding if you were making money, and the rest of the country was literally bleeding and suffering. So those circumstances have been taken off. What I see now is that there's a lot more confidence in investing. The key thing is that, are we able to drive in the investors? Now we are. The only thing I see now is that we need to now work on getting the indigenous also to be supported. Because look, let's be sincere, the foreign companies have easy access to funds. They've got cheaper rate of fund. If you look at today, what is NIBOR, what is SOFR, it's less than 3.5%. So if you're getting SOFR plus 2%, you're at 6% maximum. But in Nigeria, we're at 26.5%.
Quite tough for Nigerian manufacturers to compete.
It is tough. And so, but the lucky thing is that we have banks like Bank of Industry, which sincerely have always got it right. A bit getting it wrong today. I have to be, sometimes we have to call them out when they're getting it wrong. Interest rate, they're pushing up. And the reason I see that is that they need to get more support from both the government and the central bank. It's not entirely their fault. The cost of fund is getting higher, but they're being able to source. So we're moving away from a 10% BOI fund to a 15% BOI fund. I'm sorry.
10 to 15%. That's a BOI fund.
Yeah. So
wow.
So it's not factual. We all keep quiet about some of these things, and we think it's okay because the excuse everybody's using is okay. Interest rate is 26.5 for MPR, which means outside factor. By the time they put their spread, or you take in all the discount, is ranging between 24 and maybe a 32% interest rate, depending on whether you're retail, commercial, or large-scale corporate, although large-scale corporate I think is tailing down a bit more now. But what we need to see is that we cannot accept in any way that government would allow BOI to be seen like a commercial bank. it's a driver for manufacturing. It's a driver for real sector growth. And if that is the only thing they keep right, and they've done it right for so long, successive governments, we can't get it wrong now. No matter what interest rate we've seen over the last 20, 30 years, I've been in Nigeria now, going almost 30 years. I've not seen a scenario where BOI has totally moved away from its conceptualization or its focus, whereby we are looking at a place where there's a 5%, 6%, whichever happens. The task of BOI from both the Ministry of Industry, from the government, from central bank, is to enable real sector patient growth, patient money.
Well, what do you think will make the BOI actually raise its rates? What could it be?
It's basically they're not getting the right funding mix, which they should be. And when they even have access to it, from what we gather, they're not getting access to it from central bank, from some of those funds they've been able to get. And so, yes, because central bank is also managing its inflationary position.
The central bank is tightening.
It's tightening. Well, the central bank has to also remember, and the government has to, it must come from two sides. Both the Ministry of Finance and the central bank must come together and help BOI. I think where BOI is not using enough of its willpower is to use the manufacturers to fight its own policies, to actually fight, because telling us today it's okay that 15% is fine, it's not acceptable. I totally tell them it's not, and I will say that to my dear friends at BOI, it's not acceptable. We cannot go over the 10% mark, and we should see that BOI is a contributor to growth, and it has contributed to growth. Take that aside, apart from BOI, we have to look at other areas of key things that the manufacturers need to see. Which we both broke here with the 1st of January fiscal policy, which was the best thing they've done, that any government has done in the last almost 5-6 years, is getting that, and now it's been implemented first because of the 90-day window. 1st of July implements that fiscal policy reform, and that is seeing we see a lot of impact in the industry in terms of duties zeroed out on all machinery, irrespective, chapter 83, 84, 85, and 90, where at least that impacts machinery at zero duty. That we have to do. And it's something I've always advocated here, that look, you cannot expect manufacturers to be paying duty on trying to enable employment. I don't see the reasoning for that. So that has helped us. So we have to commend where the fiscal policies are getting it right. Now, what we didn't have before was a balancing act between macro policy and fiscal policy, which is your macro and a micro. Now, where we are now going is that we're seeing a far better balancing act between the fantastic work being done on macro policy and a lot more better work now being done on fiscal policy in terms of the macro policies. So kudos to the new minister, who is really hell-bent on fighting for us to rebalance fiscal policy, and he's doing a good job. It's been there a short while, but nevertheless, we're seeing a lot more, I'll say, youthful gear towards it.
It's nice when you just start and we start to see direction.
We need to see
where you're going. All right, so how confident are you? I guess the Naira has given you confidence. First half. Going into second half, I guess we're good.
Believe me, I think we're where the central bank wants us to be. The 1.34 to 1.4 maximum. I think that's where I see us being throughout this year. It has greater stability. It means a lot of us can make projections. Means businesses can actually project their cost to sell and also project their import or their capex. It's a lot better for us to have a stable Naira than too strong a Naira or too weak a Naira. So let us know where it is. Eventually, this is where I see the Naira going, and this would not happen in 2026. Most likely, you're going to see it between the 2027 quarter 3, quarter 4, and 2028, where we start seeing a Naira appreciation from where it is, because there's nothing we can do. The currency will continue to improve, the reserves will continue to improve, the earnings of the government will continue to improve. But the impact, what we need them to do is to make sure two things are there for the manufacturers, the long play. We need patient funds for the industry as a whole. We also need consistency in policies where fiscal policies are now being matched by the right macro policies from the central bank. And as long as we keep that consistent, yes, we have the elections coming, but I do not see that much of a shift in where we are going in terms of inflation, in terms of the Naira position over the next 2 quarters. If, and this is a blessing for this country, we survived Q1, biggest shock, and we're able to enter Q2 with inflation at 15.69, 15.8. It's incredible that we managed that. And look, as much as we have these over 200 million people who all want to strive to do well, God in His infinite mercy seems to be just pitying us and finding a way for us to track our way into a better path. It's early days from that half-year difficulty, but I see positive stability, and if you read everywhere, everybody sees positive stability. And this is the time, and I employ Nigerians, this is the time to see manufacturing as your long play. Trade, we're good at it, but the manufacturing sector is our long play. And this is the time as a country, as a people, as individuals, to put our long play into it. And for the rest of us that are already in it, this is a time we spend our time mentoring and motivating those coming in and those in it to see our success stories as something they can achieve. And I think if we do that, we would have a country that we're all proud of in the manufacturing sector, and we would have a government that is totally focused on getting the manufacturing sector for Nigeria to be the industrial hub. And that, I think, is a take out of H2 for me, half year of 2026, is that the country is now, I'll say, we've grown. We've basically taken the heat from our mistakes and spent the last 2 years literally repositioning. Are we there yet for the whole economy? No. We still have a long way to go because this thing has not trickled down. And we have to be sincere. Has it trickled down to the Joe Bloke on the road? It hasn't totally. But everything is time. Rome was not built in a day. All this takes time. I don't expect, I've not seen any economy that has been turned around in 2 years, or even in 5 years, even 10 years. We talk China, it took 30 years for them to be top in the world. And this was a country that was 144 in the world. Nigeria was better than China in 1980. Now, but it takes time. And we need to have that patience to actually allow things to work and be positive. That irrespective of these infrastructural deficiencies that we see, we need to see the positive end of it. Because if we don't, we will keep seeing 70% guys from outside Nigeria seeing the opportunities, while we keep seeing the problems.
Yeah, we all need to see the opportunities.
We need to see the opportunities.
Foreign and domestic investors and all of us here, working week in, week out to get that money. Thank you so much, sir. Always great to have you, and definitely we're hoping that all the indicators work in our favor, going into H2. Thank you so much for coming on today, sir.
Thank you.
Happy birthday again.
Thank you very much, sir.